Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for Thursday, January 5th, 2023. It's great having you with me here today. And today we're going to talk about a few slices of the employment pie. Tomorrow we're going to get even more slices. And so what we're looking for is December or the most up-to-date view of the economy through employment, because employment is continuing to be strong and the Fed is concerned that that will continue to spike inflation. Wages are going up, higher wages, hurting profit margins, uh, forcing companies to increase prices is that element of a wage price spiral that is still plaguing the economy. We see wages growing actively. However, if you look at inflation over the last year, it's still running north of the increase in wages for the household. So employment is the bedrock of our economy. Through more employment, we spend, and then that gets other people more employment. So it's very important. What did we see this morning? ADP, very strong in the mid to small companies. We actually see large companies retreating. Yeah, not too surprising, right? There's a widespread expectation of a recession coming this year. Larger companies have more dials that they can play with, meaning that they can reallocate resources, they can try to be more productive, they can move quicker on the employment dial. Mid to small don't do it. However, small is particularly vulnerable to economic downturns. Therefore, you would expect them to be in retreat along with large, seeing a strong number, and we're talking over 300,000 new positions in the medium to small companies. Not anything to sneeze at these days. At the same time, we see continuing claims moving down under 1.7 million. Yeah, it's not where it used to be, which was around 1.4. However, it's not what we saw before pandemic, even in good times, which was under 2 million. So good news there. And continuing claims around 200,000. Again, ML King to, Thanksgiving to ML King, we see some distortions there. We did see as I mentioned previously, the ISM report, we saw employment being weak. So what is that telling us? Probably have a solid jobs number. The Federal Reserve, as their last meeting, talked about strong job market, kind of defining it as above 100,000 new jobs. Looks like that's kind of baked in for tomorrow. We want to recognize that the household survey has been showing some weaknesses. The establishment survey a little bit better in terms of employment growth. So we want to keep our eyes on that balls. Other news of this morning we just want to be aware of: in the UK, the PMI, Purchasing Manager Index on the services held up. Yeah, just a touch under 50, but not significantly in contraction. That shows that they're weathering the storm probably a little better than people expected at this point. Same thing with China with the Caixin Index, telling us that, yeah, we saw weaker numbers out of the government. We no doubt expect the COVID overhang to work through their economy. However, a little better than expectations there. Again, in the trade balance actually declined. The deficit declined. That tells us that we'll probably get a little boost to GDP from that, since imports weigh on the GDP calculation. Getting into the details, we see exports still weak, around 2%, but a significantly more decline for imports. That tells us that, like the ISM number, manufacturers are concerned that they're not going forward. Their customer inventory levels are back near stable, so not in real need at this point to input on the supply side. So that's actually something that's going to boost growth a little bit, but it does kind of forecast weaker growth here in the United States. So we all look for tomorrow, and I'll be glad to talk to you then about U.S. employment. This is Scott Murray for the Daily Economic Market Shout. Thank you for joining me.